Sales are down 15%, inventory just surged 65%, and for the third month in a row, prices in Greater Vancouver are softening. So, is the market finally cooling off or is it just more noise? We've been here before. Stats shifting, headlines get dramatic, and then not really much happens. So, in this video, we're going to look at the numbers and see what's actually going on under the surface. So whether you're thinking about buying or just wondering if now is the right time to make a move as a homeowner, you'll have a clearer idea of what's happening. If we haven't met yet, I'm Richard, a Canadian real estate agent, and I'm here just to help you make sense of the market without the noise. And if clear, data-backed updates sound helpful, hit the like and subscribe so you don't miss out on the next one. We'll dive into the actual Vancouver numbers here in just a second, but before we do, it just helps to understand what's driving this shift behind the scenes. Across Canada, this past month showed early signs that we may have already hit the bottom of this cycle. National sales rose 1.8% month over month, and affordability metrics are really slowly improving. The average mortgage payments on a benchmark home are now just over $2,600, which is really the lowest we've seen since 2022. And if the Bank of Canada cuts rates in June, we could see even more movement. But here in Vancouver, that optimism hasn't translated into more sales. And why is this? Well, what we're seeing is confidence is still fragile. Buyers are watching the rates, but also the broader economy. The uncertainty is enough just to keep many buyers or people on the sidelines. Meanwhile, more listings are hitting the market, and that shift in balance is really putting more downward pressure on prices. And so now we got a bit of an understanding of what's happening. Let's just take a closer look of what actually happened in Vancouver this past month. So here are some key numbers that I just want to get into here. Sales last month was 2,831 homes, which is just down 15.1% year over year. Then the new listings that hit the market were at 7,092, which is actually up 64 or almost 65% year over year. So lots of new inventory. And then the total inventory right now that we're seeing is at 12,491 active listings, which is up 42% year over year. So we have lots of new inventory, lots of activity as far as new listings hit the market, which is no surprise here. Then looking at the MLS benchmark price, which hit 1.2 million or just over $1.2 million, which was actually down 0.1% month over month. And then when you're talking year over year, down 0.7%. So it's kind of the similar trend over the last couple of years, as whereas prices really haven't moved that much. Then we have sales to active listings ratio, which is essentially just a ratio between how many sales are happening versus how many active listings we have. And it's sitting at 23% right now in Vancouver, which is trending towards more of a balanced market. And so for those who don't know percentages, under 10% is going to be a buyer's market. Above 20% is a seller's market, and in between is more of a balanced market. But let's just break this down property by property. So the detached home segment, sales were at 814. Benchmark price was sitting at $1.972 million, which was down 0.9% month over month. Then moving on to apartments, where the sales last month were 1,416. Benchmark price was just about 800,000, sitting at 788,000, which is down 0.1% month over month. And then townhomes sales were sitting at 591, where the benchmark price was just under 1.1, sitting at $1,094,000, which again, month over month was a 0.2% decline. Now, what caught my eye this month was the apartment segment. Despite just a dip in prices, sales activity remained relatively strong because if you look at the sales data, it actually made up 50% of all the transactions. But inventory is also piling up fast. So if this trend continues, we could just see more of a shift towards the buyers heading into the summer. Then I just want to talk about some regional trends and just some neighborhood callouts that I think are worth mentioning here. West Vancouver, the detached benchmark is sitting at 3.27 million, which is flat month over month. And then the sales to new listings ratio was down to 20%. So again, tipping towards more of a balanced market. Burnaby East just hit 21% as far as the sales to new listings ratio. Then when it comes to Surrey and Langley, we got lots of inventory on the market. There's a slight softening in prices, so be wary of that. And then when it comes to New Westminster, we're still seeing a decent condo activity. Then when it comes to Maple Ridge, it's more balanced than most other regions. So I'm seeing sellers and buyers just coming to grips with reality more than these other segments. Overall, we are seeing just a rebalancing across the region, but there are certain markets that are adjusting faster than others. So depending if you're a buyer or seller, just keep that in mind. Now, we've gone over a lot of data and insights here. So what does this actually mean if you're thinking about buying or if you're thinking about selling your house and moving to a different location. So buyers, I want to start with you first. You've got more choice right now than you've had at any point this past year or for a while, really. And so prices are softening, sellers are becoming more negotiable. If you're shopping for a condo, especially in West Van, Burnaby, or even Surrey, there's going to be lots of opportunities just to negotiate well below ask, but particularly on units that just have been sitting on the market for weeks or even months because inventory is growing. Just keep in mind that if rates do drop next month, which translates into more buyers likely jumping back into the market, which again translates into reducing your overall leverage. So just keep that in mind. And then when it comes to sellers, your biggest challenge right now is just going to be standing out. Buyers have a ton of options right now because listings are just growing and they're really not rushing into anything. So here's the strategy. You need to price it right from day one. Don't go after last year's prices or even COVID prices because that's just not realistic. And then you need to prep and stage your home to create impact, right? You have so many listings that you're competing with that you really do want to stick out. So stage to impress. Expect longer days on market and just be willing to negotiate. You have to. And if you're in hot pockets like North Burnaby or East Van, you might still see some activity, but just across the board, the urgency has definitely faded. Last month was a bit of a turning point in my opinion. Inventory is continuing to build, sales are continuing to slow, and prices are beginning to bend, and we can really see that in the data. But this isn't really a crash in my opinion. It's more just a rebalancing of things. The big variable right now is just the June rate decision, depending on what the Bank of Canada decides, because the cut could bring more momentum back quickly. We just don't know yet. Until then, the market really belongs to those who are prepared. So whether you're buying, selling, or just watching to understand these shifts, it's really important to stay informed of what's happening right now. If this video helped you feel more confident about Vancouver's market, hit the like and subscribe so you just don't miss out on the next one. And if you want to see how this compares to last month's report that I came out with, I'm going to link that video right here. And while you watch that, I'm going to go fly some drones.